Hello and welcome to the 248 Emerging Companies Fund's quarterly report for June 2025. The first 6 months of the year has presented a dynamic and at times paradoxical investment landscape. Despite global uncertainty marked by geopolitical tensions and ongoing discussions around tariffs, the last 3 months of the financial year was characterised by resilience and growth in global indices. Some of the key themes we've seen play out in the year to date include new conflict in the Middle East. This has added an additional layer of caution to the economic outlook. However, direct impact on the Australian investment market appears somewhat muted, with investors focusing on domestic strengths and specific sector opportunities. Robust IPO activity has returned, with Virgin, GemLife, and Greatland Resources all performing well in terms of subscription levels, and the offers have been well supported post-listing. This indicates healthy investor appetite for new opportunities. And lastly, rising global indices. This trend was mirrored in Australia, and this has suggested broader market sentiment has remained positive, largely driven by factors including corporate earnings, tech advancements, and the anticipation of positive future economic policies, including rate reductions. Increasing M&A interest has also been helpful. We've seen a discernible increase in interest in transactions involving private companies, which is specific to our funds. As rate drops are passed through, we'd expect the increased merger and acquisition activity to continue, driven by strategic consolidation, growth aspirations, or private equity interest. Whilst all of these themes we've just outlined have specific reference for our portfolio companies, ongoing global volatility is not having a material impact on any of the investments, as they generally all have a domestic focus. Separately, supportive markets with increased IPOs, general stock market growth, and increased M&A all assist with current and future liquidity for portfolio companies across both of the funds.
Speaking of the portfolio companies, whilst we haven't received all of the final 2025 numbers from the portfolio companies, on the whole, their performance has been good, with several standouts. Automotive Superstore has had another 30% growth year, taking revenue from 10 million when we invested to 36 million in FY25 and reaching profitability in the second half. Cloudworks also had a record revenue and profit year. CleanSpace, the ASX listed CleanSpace, pre-announced that they had achieved their full year revenue target, delivering a second straight year of 25% plus revenue growth. The new chair and chief executive have done an excellent job in stabilising the business and reorienting back to sustainable growth. Deep Blue Company, after making multiple year significant investments in product enhancement and automation and having some setbacks, they've delivered their maiden profit year and look to consolidate a strong strategic position in the conveyancing market across the next 12 months. Maneuver delivered a record year of revenue and profitability. Future Group announced a very strong performance to the end of March with record revenues and profits. We're expecting to see continued strong performance when they release the full year result. Whilst there were no realisations for our portfolios during the quarter, Future Group recently announced they'll be undertaking a secondary share sale using FinClear's private markets platform FCX. We didn't participate in the sell down, but because we're more positive on the outlook for the company. If you're an investor or you're an advisor and you'd like to know more about the individual portfolio companies, then please get in contact with Annika from our team and arrange a one-on-one meeting with us.
So, looking at performance for Fund 1 to the end of June. As you'd all recall, the fund has committed capital of $1.80 per unit. Distributions to date have totalled $1.31, and the net asset value as at 30 June was $1.33 per unit. Combining the total amount distributed to the net asset value, we come to a total of $2.65 per unit. The 3-month performance of the fund, net of fees, was approximately 1.5%. And since inception, net of fees, the fund has returned 47%. Since inception, net of fees IRR of the fund, as at 30 June, stood at 11.8%. There are 8 remaining positions left in Fund 1, and each company is actively in a process or engaged in discussions regarding a sale or a liquidity process.
And now for Fund 2. Fund 2 also has committed capital of $1.80 per unit. Distributions to date are 35 cents per unit, and the net asset value as at 30 June was $1.53 per unit. Combining the total amount distributed and the net asset value, we come to a total of $1.87 per unit. The 3-month performance for the fund net of fees was 4% positive. Since inception net of fees, the fund has returned 4.34% positive. Since inception net of fees, the IRR of the fund as at 30 June was 1.23%. As at 30 June, 10 investments remain in the Fund 2 portfolio. Once again, if you would like more information about anything discussed here, please don't hesitate to get in touch with us. We'd be more than happy to assist with your questions. Thanks very much for watching, and thank you for your support.